But we have been talking about rates. Let's bring in CEO of Prosper Trading Academy, Scott Bauer, to help us further that discussion and then take a look at some currency markets that are on the move. Scott's joining us to, dive first into, Scott, we've been talking about the TNX on the move higher, the ripple effect that creates. I guess I'm wondering, some are calling at the top of the show, I said 2% in the TNX, a game changer, a line in the sand. Do you agree?
I would have said that, and I think we did have this discussion, Ben, about 3 months ago, 2 months ago, that 2% was possibly a game changer. Now that we're, knocking on the doorstep, to me, that becomes more psychological now than anything. So we may see a reaction to that if it does tick to that 2% level. I don't really think whether we're at 198 or 205, it really makes a difference. But I do think that this area that we're in, so let's call it the 2%-ish or maybe 185 on the downside, and I can see us going to 220. I think that will be the trading range for the next 3 to 6 months even.
Okay, 1.95, so maybe reaching a level here where we can find some comfort and kind of lose some of the momentum of the upside, digest and wait for some more information. Let's talk a little bit about what's driving this activity. Treasuries to the downside, again, yields higher, futures lower. Is this still just kind of dust settling or some of the stir, I guess you could call it, from the jobs report on Friday?
Yeah, it's a lot of stir from the jobs report. I mean, that was such a blowout number and such an unexpected number after, some of the estimates that had come out for even a negative number that had come out. And that number certainly has given a lot of support to the dollar, which, for the most part has been grinding higher. Last week took a little bit of a rest, sold off a little bit, but then really popped on that number. So that jobs number last week really provided support to the dollar. It certainly kept this run toward 2% on the 10-year going, that's for sure.
Scott, speaking of numbers, we had international trade in goods, maybe not the most closely watched number here this week. I think CPI is kind of front and center, which I do want to get your thoughts on in just a minute. But in terms of this data, if we could just pull it up, probably not a major market mover, but just in general, it seems like the eco data and earnings, for that matter, have been a lot more mixed, not really the backdrop that investors, traders had been looking for or been able to kind of fall back on in the past months and the last few quarters. We're looking at, here you can see the trade balance here, which fell. Again, looks like a little bit better than the estimated 80.70 billion. They were looking for 83, a decline of. But talk to me, Hong Kong manufacturing PMI overnight. I saw it fell below that boomer bust level to 48.9. I saw the NFIB even this morning, which came in a little bit below consensus. I mean, it just seems like the data hasn't really been hitting that higher mark.
It has not been, but you started our conversation just a few minutes ago with the word lackluster.
Okay.
The markets are lackluster right now, and that's not necessarily a bad thing, but that is certainly a reflection of some of this eco data that we are getting, not just here in the U.S., but across the world as well.
I'd agree, and I thought you were going to go with I thought you were going to say, well, what about the jobs report that we were just talking about? It did hit that higher mark. Let's talk a little bit about the Fed and, this talk of, with the 2-year at 1.32%, there's a lot of talk about the Fed being behind the curve. I guess the question after that is, if the Fed is, where does that put the ECB?
Well, let's first talk about the Fed. And, the chances now of a 50 bip hike in March are about a third, about a 33% chance. I still don't see that happening. Okay. That would be, to me, like completely ripping the Band-Aid off the wound, which I don't think they're going to do. We're still, we're still kind of treading between the economy being really good and the markets, right? And I think that the Fed has to dance around that. So I don't see that happening. Now, talking about the euro and what's going on there, they've made a complete 180, it seems like, in the last week or so with Christine Lagarde's comments going to the hawkish stance. They're certainly behind the curve or behind the rhetoric where our Fed is at that has made that, hawkish move a while ago. So there definitely are inflation risks in the Eurozone. They're rising. There's no question about it. They have to balance, just like we did too, like what we've been going through, the potential of higher rates, but also with this inflation that is really hurting people in the Eurozone.
Inflation risks, again, rallying here, the euro currency on the rise here, back up to the 115 handle. Scott, how closely have you been following this trucker strike situation? I saw both directions of this Ambassador Bridge now between Detroit and Windsor are closed, ultimately impacting a significant amount of product and trade that travels through.
Yeah, and you would hope that gets resolved, sooner rather than later. I don't think there's much of an impact to the market yet. I think right now it's more watching it in the media of what's going on. Obviously, if this gets prolonged and lasts weeks and months, of which we all hope that it doesn't, then you could start seeing some significant impacts. But for right now, I don't see it really impacting supply chain or the markets right now.
Okay, the Canadian dollar, for the most part, still holding up above the 78 even level, but I've been watching Canadian dollar and wondering when it's going to take note of crude's recent rally. Any other foreign currencies that you have your eye on other than the dollar?
Well, the euro, obviously, with what's going on there, I think that is really, really one to watch. Down slightly today, and it's really struggling to hold around that 114 level or so. It did rise up to almost 115 Friday after our number, which was its highest since, I think, early January. So that's certainly one to watch. And obviously, with the markets kind of being risk on recently, the Aussie dollar has rallied a little bit. It's pretty flat today, but that has rallied as well, which, that's one of the currencies that we watch all the time and really kind of base sentiment, risk sentiment worldwide on the Aussie dollar.
Yeah, if we could pull the chart here, actually, the 6A, we've been watching the Aussie dollar, the 6N as well, and kind of tying back to that Hong Kong manufacturing PMI number, they have firmed a little bit, as you mentioned, recently, but they have been under pressure and coming off, for the most part, trending lower. Lastly, Scott, I wanted to get your thoughts on Bitcoin, a bit of a move higher yesterday. I heard some comments from, I think it was Russia's finance minister or something, basically saying regulatory the direction following regulation is a better one to take rather than banning it all out. He said that the Russia bank should basically be in charge of that.
Isn't that what we have been talking about here for years, that regulation would actually be a good thing, though, rather than just kind of stay in the wild, wild west? I think that is a good thing for Bitcoin. I'm not sure that really had any impact. I think the rally that we've seen recently, which has been a nice one, you kind of have to be careful with this one, Ben. It's been on very low volume.
Okay.
It has not been, to me, it has not been a short covering rally. There are shorts that are, that are getting back in, but it has not been, oh my God, I've got to cover right now, because it's been on very, very low volume. And that's typically something that doesn't last. Okay,
we were just looking at the, there's the daily. If we could just pull up a couple charts here real quick. I want to point out the hourly, how we've come off the all-time high, 69,000 down to 32,000. Scott, the rally we're seeing here, you just said, again, on light volume, we can almost feel that in many ways. It's just kind of a drift higher. And then lastly, I did want to point out here, right back to the 50-day moving average. So again, maybe that next hurdle to keep an eye on here at this point. This will look at the daily. Again, we had that up a minute ago, but now we're bringing in that look at the 50. Scott, appreciate you joining us and give us part of your Tuesday morning. Scott Bauer, the CEO of Prosper Trading Academy. A great breakdown in terms of what's playing out here in terms of financial markets and some of the eco data. Thanks, Scott.